Hello and welcome to this episode of Akrinos Access, where we are talking all about how to make Section 179 work for your practice. So with year-end upon us, many practices are looking to add equipment and software to take advantage of tax benefits under Section 179. So in this episode, we're going to identify 6 areas practices should really evaluate to ensure strategic effectiveness of the investment and to be sure we're maximizing the ROI of that decision. So to kick it all off, what is Section 179? So Section 179 of the Internal Revenue Code allows businesses to take an immediate deduction for business expenses related to depreciable assets such as equipment, vehicles, and software. So this is going to allow businesses to lower their current year tax liability rather than capitalizing an asset and depreciating it over time in future tax years. So now, although there are maximum deductions in property values under the code, Section 179 is a remarkable opportunity for independent optometrists to receive significant tax benefits for the year. So we're talking capital investment and your bottom line. So while many expenses on the income statement can be adjusted with ease, right, such as cost of goods sold, payroll, marketing, unless it's paid in cash, capital investment in equipment and software is going to be a long-term obligation. So that said, must ensure that these investments are going to enhance the bottom line and boosting cash flow more than the next best use of the funds, right? The opportunity cost. So you'll want to thoroughly evaluate these 6 key areas just to ensure this year-end investment is going to benefit your practice long-term. So number 1, practice life cycle. So look, your vision and where your practice stands in its life cycle is critical to optimize the capital investment in equipment and technology. So as such, it's important to consider practice goals and time horizons in this decision. So for practices looking to grow, adding the equipment and technology is an excellent way to differentiate the practice and drive sustainable growth in both the short and long term. Alternatively, for practices looking to sell, it's important to consider the impact the new investment will have on the practice valuation and realizing that this will have a different implication depending on the time horizon you're operating on. So next up, after considering where the practice is in its life cycle, number 2 is going to all revolve around volume. And that being recognizing that utilization is a key consideration when investing in equipment and software. So you're going to want to start by listing all the conditions that the instrument can benefit along with the diagnostic codes. Next, execute a query of your EHR to determine existing patient volume of those diagnostics and determine the frequency of that procedure on each patient. Now, be sure to include patients even without billable diagnosis conversions who may be candidates for direct pay services. And similarly, when evaluating the investment in a software solution, you're going to want to consider the practice and patient experience and the frequency of the current workflow to quantify the potential benefits of the SaaS or technology workflow. So moving along, we've touched on practice lifecycle. We've touched on volume and utilization. So the third key consideration when making this year-end investment, it's all around reimbursements. So really, recognizing that if managed care is a sizable revenue channel, which it likely is as it is for many practices, evaluating reimbursement levels for these services rendered utilizing the equipment or the software is critical, critically in need of exploration. So determine this, identify the top managed care payers in the practice, and evaluate what they will pay for those identified procedure codes. Now, this analysis can inform the projected return on the investment of the equipment and determine appropriate out-of-pocket fees for direct pay. Now, on a separate note, for those intent on eliminating managed care altogether, this exercise is actually the first step in the process. So moving right along, again, year end is upon us. We're eyeing that piece of equipment or software to invest in to take advantage of Section 179. Fourth thing to evaluate is going to be budget. Obviously, this is a critical piece of all decisions for your practice, but here you'll want to be sure that your cash reserves, or recognize that the cash reserves will be impacted by this investment in equipment or technology. So it's really vital to determine your targeted cash on hand and understand how those costs are going to impact that cash on hand, both in the short and long term. So you'll want to go ahead and conduct a financial forecast and feasibility analysis of that addition. And this is going to provide insight into a variety of these financial considerations for the investment. So further, beware that when making a lump sum investment, lump sum payment, it's going to be important to project how long it's going to take to replenish that cash on hand. So again, this too is going to change in time as the investment gains traction. So driving top line revenue and delivering those economies of scale in your workflows and operations. So the fifth key consideration when determining if investing in that piece of equipment at this time of year is going to be worthwhile, and that is the financial details. You're going to want to be sure you're investigating the full financial details on the equipment or software. It's really imperative to understanding the financial feasibility of the investment. So you're going to start by acquiring all the financial details for purchasing the equipment versus leasing the equipment. Now, when assessing these details, be sure to also factor maintenance and repair costs associated with the purchase, as well as other hidden costs, shipping, IT and networking, perhaps insurances or other service contracts. You're also going to want to be sure you inquire about any other manufacturer promotions or negotiated pricing you may have access to. And be sure to not overlook the potential to also negotiate independently. You may be surprised at what you can secure with some of these equipment manufacturers. So lastly, when exploring the financial details, you want to be sure you assess the labor costs associated with this new equipment or software, and particularly quantifying that time spent on training and also conducting the procedure or utilizing the software, as this is also all going to play into exactly what the cost of that investment is. So moving right along here, we've touched on a number of key points as you're exploring making this year-end investment, take advantage of 179. Going to want to be sure you're cognizant of where you are in your practice life cycle, certainly the volume and utilization of that equipment and expanding scope of care. Going to want to assess the reimbursements across managed care plans in the practice. Definitely assess your budget and the impact the investment is going to have to your cash reserves, both now and the future. And definitely explore all of the financial details of the purchase. But one thing that we haven't touched on, and it's tough to say which, if any, are the most important, but the marketing side of this is going to be tremendously vital, right? The last thing you want is for this equipment to be collecting dust in the back of the office. So an effective marketing strategy is absolutely necessary to drive utilization of your newly added equipment and software. So the key to any successful marketing plan rests on alignment of consistent communication at all patient touch points, both externally and internally. So here we're referring to, think of your external marketing tactics to engage and attract patients and prospective patients from outside of the office, right? And a lot of this these days is centered around that digital experience, your practice website, social media presence, and be sure that you have targeted engagement campaigns across platforms. Now, conversely, don't overlook the internal aspects of your marketing strategy, particularly as it pertains to the in-office experience. So this would include the point of sale literature and presentation, promotion and signage, and huge is going to be team alignment on all patient communication. And be sure of leveraging appropriate language and workflows throughout the practice. So again, the strategic omnichannel marketing plan for this newly added equipment or software is going to be vital to both the short and long-term success of the investment. So in conclusion, if you're planning to invest in equipment or software here at year-end to take advantage of those Section 179 tax benefits, be sure you are evaluating your practice lifecycle, projected utilization, reimbursements across managed care, definitely your budget, explore all the financial details of the deal. Be sure you're putting that marketing plan in place to ensure sustainable ROI on the investment. For more great tips like this for modern practice management and a whole lot more, be sure to follow Akrinos across the socials and subscribe to the Akrinos YouTube channel. Until next time, from all of us here at Akrinos,